Gold has been making a very crazy move since last week. In today's video, I'm going to show you how I'm going to be joining this crazy move this new week. But before going into that, if you're seeing me for the very first time, my name is Divine. What I do here is document how I trade and make interesting videos that will improve how you approach trading. If you like content like this video, subscribe, drop a comment. Tell me, what are you looking at for gold this new week? I'll be right back. The first thing we want to do is to simply understand where gold is crazily running to, right? We want to simply understand where gold is going to and see how you could join price to where price is going to. And for you to simply understand where it's going to, we want to start from the daily time frame. And the two key things we want to do on daily time frame is to simply understand the direction it's going to and the key level, right? And for us to simply understand direction, we want to simply zoom in and see the bigger picture of what price is doing. And now the bigger picture is saying to us that price is simply in an impulsive uptrend, right? That means price is impulsively going to the upside. And if you were to use, let me say, a trend line to simply confirm this information, we'll see that here is simply a solid what? Support. And for every solid support, there is always a resistance. In this case, here is clearly a resistance, right? Here is clearly a resistance. What this information is giving to us is this: the price is simply in a strong uptrend, and price broke above a resistance level, and price is still pushing to the upside. How do we then join price to go to the upside? For us to simply join price or identify points we want to simply join price to the upside, we want to simply understand the key level, because it's the key level that will tell us how we join price to where price is going to. In this case here, for us to simply identify the key level, our interest is simply at the last point that price gave us a reaction from on the levels. In this case, the last point you can see here is simply the resistance that turned to support, right? That means a key level we first identified is the point where resistance turned to support. That is the first key level that is acting as the support key level. And for every support key level, there is always a resistance key level. In this case, the point where price got to at the moment will be acting as the what? The resistance level. Our aim here is simply to use these key levels to simply understand the market structure on the 4 hours time frame, right? We want to simply understand what price is doing on the 4 hours time frame, the market structure, the zones that price created on the 4 hours time frame. Then we can know how we jump price to the upside. In this case here, if we are to focus on only on the key level, because whenever you identify a key level, you identify the market structure from the support key level to the resistance key level. In this case here, let me remove this other one here. The two lines we can see is simply our resistance and our support key levels. And looking from the support level to the resistance key level, we see that price is in an uptrend, right? That price is giving us a strong uptrend. That here is simply the low, the high, the low, the high, the low. This is the high, the low, the high, the low, the high, the low, and this is the high. That means in this whole scenario here, this last point is simply the last low, and the point where price is currently at is simply the last high. That means we are working with this swing low and this swing high as our market structure, right? Because we've identified the market structure, the next we want to do now is simply understand the zone that was created between the last swing low and the last swing high. And in this case, there are two zones, yeah? Two demand zones are simply available on this particular swing low and swing high. Let me identify the levels, right? This is the first demand zone, and this is the second demand zone, right? Now, this demand zone is going to give us a clue or point we can join price to continue to the upside. But before we use this demand zone, we're simply going to go to the 1 hour time frame and refine this zone to become a good point of interest, right? A good point of interest. On the 1 hour time frame, we are as well looking for two things, right? To refine the zone to a point of interest, and again to identify a liquidity zone. The liquidity zone is going to confirm if price is going to eventually go to the upside or there might be a possible reversal. We're going to use all of this information to understand how we can join gold to where gold is going to. Now, how do we refine this zone to become a point of interest, right? By simply using a specific candlestick to represent this full zone. And if you are to do that, you would see that this place is going to be the first point of demand. And for this one here will clearly be the next point of demand, right? That means we have refined these two demand zones to become a point of interest. That the only thing that will make these zones to hold is if there's liquidity to hold this zone to continue to the upside. And in this case here, looking at the first zone here, there's obviously a liquidity to hold the zone to most likely buy. And as you can see, price is respecting this zone. And the thing becomes, how do we join price to continue the upside? Since price has respected the recent demand zone that was created on the 4 hours time frame. Now, for us to simply understand how we can join this price at the moment, we want to identify here to be the last swing low, and then study how price has moved from this swing low to the current point price is. Right? Remember, we are looking at how we can simply buy price to this zone here. There's a liquidity here. There's also an equal high liquidity here, meaning there's tendencies that price is likely going to buy to this zone, right? Because price has taken out what? Liquidity that was here. And because price has taken out sell side liquidity, price most likely will go for the what? Buy side liquidity. How do we join this particular entry on gold? That takes us to the 15 minutes time frame to understand how price has moved from this low to the current point where price is. Now, on the 15 minutes time frame, we're trying to identify three things: the swing highs and the swing low, the entry point of interest, and the liquidity. Right? In this case here, if you are to look at how price has moved from this point to the point it is, you will see that price gave us a zone here, gave us a liquidity here. Let me mark them out myself, right? Price gave us a point of interest here, gave us a liquidity. This place was a good point to buy from. Now, because price has protected this particular point, here becomes a low, right? That is protected. Now, when price gave us this low, what did price do next? Price gave us a what? A change of character, right? And also price gave us a what? A break of structure. That means if you want to look for a buy opportunity, our buy opportunity should be at this level. Why? Because here becomes the new point of interest, and here becomes an inducement, right? Here becomes an inducement. And a buying opportunity would be that if price simply sell down to this point, most likely we look for a buy opportunity for price to take out the what? The liquidity that's resting here. That means an entry will look like this: a buy from this point here. Our stop loss is going to be below this low here. Our take profits is going to be this liquidity point here for a 1:4 risk to reward. This is going to be my entry on gold. However, because we do not make precisions of what the market is going to do, we only position ourselves for an opportunity. When we see one, we'll strike. Now, the reason why I will not take this trade is if price does any of these two things that I'm going to say right now. And if price open tomorrow and price continues to buy to the upside from this level, then I won't take a buy. I'm going to simply watch price, take out liquidity, give me a possible change of character, then I'll look for a sell. But if price open and price starts selling to the downside, I'm simply going to expect price to respect this zone to continue a buy to the upside. That'll be all for gold. I will see you in the next video. Peace.